The American economy is now in a superbubble. Economic bubbles around the globe have always haunted analysts and economists. We've seen many bubbles form and pop in the previous decades. And once again, there's a threat looming on us. That American economy might be in a superbubble right now. Do these speculations have any factual basis? Keep watching to find out. Hello guys, welcome to a brand new video on my channel. Today, we will be discussing the recent news and articles that have predicted that the American economy is currently in a superbubble, and in no time, the bubble will pop, and the economy will be dragged into a recession. So, are these predictions true? And is there something we can do about it? Let's find out. Before we jump straight into the part where we talk about America's current economic situation, I think it's necessary to provide you with a little bit of context on what bubbles are, how they form and pop, and what are the repercussions that the economies face once they pop. So, the bubbles in the economies signify economic events that occur during a long-term economic cycle. A bubble in the economy forms when the economy shows a very fruity picture of its performance and figures. The best way to judge how the economy is performing for a certain time interval is judged by the performance of its stock market. It is because when the economy is in good shape, it boosts the confidence of the investor in the economy, which is represented in the stock exchange points. On the contrary, when recessions or economic downturns are predicted, investors lose interest in the economy and pull out, which has very drastic impacts on the economy. Let's get back to the point on how bubbles or superbubbles are formed in an economy. So, a usual economic cycle starts with the economy performing well initially, and then it goes on to hit the highest figures when measured for a specific time interval. The element which impacts economic performance greatly is the interest level, and interestingly, an economy is only able to hit high figures when the interest rates are kept low by the Fed. Low interest rates mean higher investment levels that increase the value of assets. This causes the economy to operate at the highest level and asset prices reach as high as they possibly can. Everything seems to be working in sync until an event on a global scale comes up. Such an event can be political, geographical, or socioeconomic. But what such events do is that they create uncertainty that leads to random decision-making coming in from the investors and devaluation of the assets, hence causing a sharp decline in the stock indices. This phase of the economy is the second phase. The third phase starts when investors see that the prices are low as compared to an all-time high level, so maybe it's the right time to get back to investing. This phenomenon is known as a bear market. Investors keep investing, increasing the demand for assets, and the economy recovers back. The cycle keeps on repeating until the time comes when the economy is operating at peak asset prices and the Fed increases the interest rate. The reason for such an increase is to control the unrealistic increase in the asset prices, the commodities valuation, demand in the economy, higher consumption levels, and lower saving levels. What this does is that a superior economic performance showing a very beautiful picture of the economy, which is all due to lower interest rates, comes crashing down. The investors pull out their investments, which is also called crowding out. The crash or burst of the artificial bubble formed is so bad that it forces the value of the asset to go down below the levels it goes to when things go down during the second phase. This leads to recession. There are many examples from the American economy when things came crashing down. The housing market of 2008 and the dot-com bubble crash are two of the most popular ones. By now, we have discussed what are bubbles and how are they formed. But let's now talk about our consequences of bursting bubbles and why are they bad for the economy. Though one thing worth mentioning is that different economic schools of thought have different views about bubbles and their impacts on an economy. However, there is a major consensus on the fact that they are not good for the economies in general. So, what happens when a superbubble in an economic crash is that asset prices go significantly low. The economic machinery is working at its lowest. Demand and consumption go down, and basically everything that drives the economy gets badly affected. If an economy is not operating at its best, this will affect other economic trends as well. For example, unemployment goes up and many businesses run out dry and leave the market. So I'm pretty sure that by now you must be very well acquainted with the term economic bubbles or superbubbles. Now it's time that we go back to discussing the topic that we essentially came here to discuss. It's whether the American economy is in a superbubble. The answer to this question, unfortunately, is yes. If we observe the stock prices before COVID-19 hit the market, then the recovery phase and the prices on which we stood a few weeks ago, it all shows one dreary picture of the economy, meaning that a recession is coming. When the Fed in the US increased the interest rate after so many years, many analysts and observers predicted that a post-COVID-19 recession is on its way, and we can't do anything to stop it. There are a few reasons worth mentioning that predict a burst of superbubble, which is currently on its way. The first one is the high stock index prices, with Nasdaq hitting its all-time high price as soon as the market's initial recovery phase began after the world got some control over the pandemic. The second most important and predictive behavior of the U.S.'s economic bubble comes from the fact that a trickle-down effect in the world economies plays its role. For example, there is overwhelming evidence that suggests that China's economy is going to crash. Chinese economy, being the second biggest economy in the world, will have severe repercussions on the economy of the U.S. The major events that provide us with shocking evidence that a bubble burst is not very off in the calendar are the distressing situation between Russia and Ukraine, plus rising tensions between China and Taiwan. Considering all these macro trends, it will not be wrong to say that we are walking right into a major bubble burst that will eventually end us, causing a recession. Layoffs have already been started at many startups and technology-based startups, and many senior investors have predicted this burst. So, it gives me no pleasure to break it to you that we are going to face an economic crash. When precisely it will hit us, we don't know. But it's coming, so what can we do about it? I know the picture I've put forward is a very dreary one, but don't worry. I have something for you that might help you in tough times. Because, as we know, an economy that hits boom is destined to go into a recession. It's the rule of nature. You can't change that. What we can change is taking a proactive and retrospective approach towards investments and savings that will help you steer clear of the worst impacts of an economic crash due to the bursting of the bubble. A few pieces of advice from the best in the industry are that, while you look for an asset to invest in, don't go in for assets that are going up in prices without any intrinsic increase in their value. It is because chances are that the way the prices are rising today, they are going to go down once the bubble bursts. So, research the assets you plan to invest in. However, the best advice that I have ever got, and I'll dispense it here for you guys, is to diversify your investment portfolio. Never opt for putting all the eggs in one basket. This will put you at leverage. So make sure you do that. And for more advice on how to survive an economic crash, you can always check out the resources available. On that note, I'll end this video here. I hope you liked it and found it helpful. If you did, please give it a thumbs up. Don't forget to subscribe to our channel. Till then, take care, and I'll see you in the next one.